It's been called a model economy. In 1990, a financial crisis led to the collapse of banks, a sharp drop in GDP, and soaring public debt. Almost 3 decades on, Sweden boasts the lowest levels of national debt in the European Union and relatively stable inflation. But the Swedes' success of reinventing the economy is at risk of turning sour. The Krona hasn't been a favorite among investors this year. It's fallen more than 10% against the dollar, making it the worst performer among developed market currencies. Investors are increasingly concerned the central bank won't raise rates despite increasing inflation. On Thursday, the Riksbank fueled those worries. It kept the benchmark interest rate at minus 0.5%, but suggested they would raise it at the end of the year. The currency is also taking a hit from the uncertainty of a contentious election on Sunday. Popularity polls suggest the anti-immigration Sweden Democrats could win the most seats in parliament.
That they really want to reduce immigration to Sweden, but also that they see immigration as both an economic and a cultural threat to Sweden, and that distinguishes them from other voters.
The influx of immigrants has become an economic challenge. When coupled with dwindling construction activity, Sweden is struggling to cope with a housing shortage. Opposition parties are also pushing for a tax reform and cuts to social welfare. They've blamed high taxes for hindering economic growth. And the government has warned of stalling growth, which could start as soon as next year. And with more moderate parties unlikely to take a majority in Sunday's elections, it could mean months of political instability. While a stronger voice in parliament for the Eurosceptic Sweden Democrats could trigger a so-called Swexit, and either outcome would be a bitter pill for many Swedes to swallow. Laila Humairah, TRT World.